Hey there, everyone. My name is Ryan Schul. Welcome to my analytics channel. So, in the narrative today, I want to talk about how I created this experiment to see if news that comes out during via different media channels has any impact on stock prices. Okay, does positive news drive up a stock price? Does negative news drive the price down? So, I want to analyze that and go ahead and answer this question. So, this was originally proposed to me, I don't know when, years ago. I met some awesome guys at some investor conference, and we were talking about this. So I think it was a pretty interesting topic, and I want to address this. This is not on my channel yet, so I want to put it out there so everybody can see it. Okay, so I'm going to go ahead and import the regular libraries over here. Okay, so that's what that is for. That should be pretty standard. If you see my other videos, this is going to be very, very recognizable. I have the Dow 30 tickers in this list, and I am going to pull in the Dow Jones Industrial Average as well as the S&P 500. Okay, so I just want some reference here to understand like how are all these stocks performing relative to each other and relative to the overall benchmark, which is going to be the S&P 500. And I want to look at the market as a proxy too. Okay, so I went ahead and created a data directory here. I have the start date as 2020, so that's pre-COVID, right? That's just before COVID hit. I want to pick that up, and the end is going to be basically today, right? So it goes up to current. I have my news API key in this file on my desktop, right? So you're gonna have to go ahead and set that up. You can get that from this website right here, get the API key. I already did that. You're gonna have to do this for this thing to run. Okay, and then just drop it on your desktop. That's pretty much it. So I'm going to go ahead and open that file, Control F, where is it? Oops, Control F. And you can see that the file is referenced right there. I'm getting that and opening that and just fetching it, and the API key is contained in there. So you don't have any spaces or trailing or leading spaces. Just make sure that's just the key, and that's it. Okay, that's all you want there. So I'm going to go ahead and download my prices from all the items in this list of tickers right here. This is my Dow 30, so I'm going to go ahead and run that. Control Enter to refresh the cell, and as always, I'll give you all this code so you don't have to take notes or try to figure out what's going on. You can just download it and copy and paste it and run it in your own environment. So we have the returns right here. So I'm looking at stock returns and market return. This is the market return down here, right? And these are all the stock returns. So pretty standard stuff. I've got probably at this point a couple dozen videos on my channel that describe exactly the same setup. So that's pretty normal, right? So I want to go ahead and create a small dictionary here with the ticker symbol. That's what you see here, and then the name of the company. Okay, so we're gonna have a key value pair. You see this all the time in a dictionary. Key values are basically the definition of a dictionary, right? And you see a few other data types as well. You can see I'm using a list over here, right? The list has these square brackets. Sometimes I use tuples. It's not very often because they're not mutable. You can't change them. I like lists much better, and data frames. So I tend to use these three. Okay, so at this point, so I'm creating the ticker, the title, the URL, the publisher, and the date. Now I want to go ahead and use Google search, and I'm going to go back 30 days. Okay, and I'm going to grab, I think this is a limit of 20. So 20 news articles per ticker going back over 30 days. Now you can see that the stock information goes back to early 2020, right? So we're going to have tons and tons of history. We're really just going back about 20 days for the news, or 30 days for the news, and 20 ticker news articles, okay? And we're going to go ahead and analyze all of these from this RSS feed, and then I'm going to try to determine the sentiment of the news article, right? We're going to do a quick sentiment analysis and understand, is this positive, neutral, or negative news, and then see what kind of impact that has on the stock price, okay? So hopefully that makes sense. So we're going to get these news feeders, RSS feeder right here. Okay, so give this a moment to run. This goes pretty quick. It does take a few moments. And we have the pause button. I'll be right back. Okay, so it did take a couple of minutes, and I've got my news articles here. So I have the ticker, right? This is the stock ticker or symbol, whatever you want to call it. We have the title, and then we have the link too. So if I go over here, copy and paste this, you can see where that is coming from. I also have the publisher and the date of the news article. So that was 10/7 2024. We have 10/11/2024. The date that the article was published, I guess that's what that is. Okay, so if I copy and paste that in here, just a quick sanity check. Okay, Honeywell debuts new technologies across the electric vehicle battery ecosystem. So that seems to be working fine. Let me look at this one over here. This one was for Boeing, right? So what's this article talking about? If we go over here, Boeing CEO message to employees on positioning for the future. So both of these seem kind of neutral sentiment, not huge positive, not huge negative. Definitely not negative. Doesn't seem to be. Let me just do one more quick sanity check over here. Control V to paste it, and Honeywell launches new generation of AI capable devices to propel workforce productivity and customer experiences into the future. Okay, so I mean, this one's a little bit positive. Is that going to drive the stock price? Probably not. I don't think the other two are going to have an impact either, but let's see. Okay, we'll do the analysis and we'll see. So anyways, I have the data frame all set, so that looks nice. So let me go ahead and leverage some NLP techniques over here. So this is natural language processing. I want to look at the topic itself. This is what we're going to focus on. This is called title. Okay, so we're going to look at the title. I'll try to determine the sentiment. Is this positive, negative, or neutral? And this is a surprise. This is kind of what people kind of expect, or this is just a surprise to users, right? So I have the sentence transformer down here. I'm going to pop that in and basically run that over the RSS newsfeed. This is news RSS. Okay, so that is a data frame. If you go back here, you can see that indicated right there, right? So we're looking at the head. So you can see in all these videos, I try to explain this, and I have to figure this stuff out too. I don't know everything, guys. I certainly don't know everything. So I have to figure it out as I go along. But I try to make these videos like pretty much very similar, very standardized, so you can follow along pretty easily. And it's just easier for me too, right? There's probably many ways you can skin this cat. If you do everything always different all the time, it's probably gonna be a lot harder to learn. If you come up with little changes once in a while, that's totally fine. But if you do things fundamentally the same, and that's just your style, that's your sort of purpose, or what I say, just your signature or your style, I think that's totally fine. Just try to be consistent and persistent, right? So I'm referencing the sent date and the sent and then the date in the RSS news feed that comes from the data frame. You can see that. And I'm going to look at rolling period over time, because I don't know just exactly at this point in time, is there going to be an impact on the stock price based on this news article that came out? But we can look over a period of what are we looking at? Minimum period of 5 days to see if there's an impact, right? So maybe at this point in time, there is no impact. Maybe there's a slight lead or a slight lag. I mean, I don't think there would be a lead necessarily, because news hasn't even come out. But maybe there's a slight lag between the news article being punished and the movement of the stock price. And again, maybe there's no movement whatsoever, right? That's what we're trying to determine. So I have some basic metrics over here. I'll show you how this works in just a minute. I'm going to hit Control-Enter to run this. Okay, this should be pretty quick right here. And again, I'm looking at the ticker, the date, topic shift, and then the mean. I just want to understand the average change in stock price over time, again, based on the news that is being published from these Google news articles, right? So we're using Google over here. If you look close, you can see that is the source, right? So Google RSS. I forgot what RSS stands for. Let me check this out real quick. www.RSS feed. Oh, here we go. Meaning, I used to know this. I forgot. Oh yeah, really simple syndication. Okay, so it's just basic news, right? And you see this all the time with comments online. Probably Twitter uses some form of this or something like that. Maybe YouTube uses it. Certainly the news uses it. I've seen this in Stack Overflow. They have RSS feeds as well. I haven't used Stack Overflow in quite a while. Some of those people over there are kind of mean. Like, you ask questions, right? And they take it for granted that you know all this stuff. Well, if I'm asking a question, it's because I don't know. That's the purpose of me asking that question, right? And they expect you to know everything all the time, but nobody knows, okay? So this is running. And again, we're looking at the topics, the topic shift over the span of 5 days and looking at things like the average sentiment, right? And what kind of impact does this news story that is published having on the stock price, right? Is it driving it up? Is it driving it down? Is it just in between? There's no neutral sentiment. There's no real up or down movement of the stock price, or like what's going on over here. That's what we're trying to determine. So I think this is almost finishing up. Let me see here. And I think it does take a little while because it has to do the analysis for every single record. And I think we're getting like, what was it, 20 per? Let me look at the setup again. So, yeah, going back 30 days, I'm looking at, I think 20, where is it? I can't see it right now. 20 per, oh yeah, per ticket, per limit. So it's got like 600, I think, over here or something, or 300, right? Okay, 300. We have 30 tickers in a Dow, and maybe not all of these tickers even have news on it, right? So Honeywell does. There's one there. There's one there. This is Boeing. CRM, I believe that is Salesforce, and what is this? Intel, right? Yeah, Intel Newsroom. Okay, so that's it. So still waiting for this final data frame to be displayed, but this should come up in just a minute. I'm going to hit the pause button here, and I will circle back when this thing is done. Okay, so hang in there. Okay, we're back in business here. So I have the ticker, the date of the published news article, the sentiment mean. This is the feeling. Again, sentiment is positive, negative, or neutral. So this is the average sentiment. This is the feeling of the article, the number of counts for that article. Looks like there's one there, and then the cent Z and the topic shift. Okay, so we're looking at these metrics right here to, again, try to determine what is the overall sentiment of that news article, right? And how is that going to potentially drive the stock price, or does it have no impact whatsoever? Okay, so I'm using FinBERT to go ahead and leverage this tool for my NLP stuff here. This is a natural language processing model, and it is pre-trained specifically on financial text. So I think this is very appropriate. It's built by training the BERT language model in the finance domain using large financial corpus. Corpus is a body of text, and thereby fine-tuning it for financial sentiment classification. Okay, so I just Googled this thing and I just copied and pasted it over there. Hopefully there's no kind of, what is it called, plagiarism or something like that. I don't think so. I'm just defining what's FinBERT. That's it. So we have the cent mean. This is the average FinBERT sentiment of the day's headline per ticker, right? We computed the FinBERT class probabilities based on headlines, again, sentiment, and the sign score. P is positive and negative. It could be either or in between, right? If it's neutral, the article count is the count for the ticker, how many headlines went into it. Normally it's one, sometimes you'll see two, so there's two articles here for, what is this, Walmart, I guess. The sentiment Z-score is a standardized definition from the ticker's own 30-day rolling mean. So Z is always calculated as mean minus the data point divided by the standard deviation, and this just shows us like how skewed or how something is going to move over time, right? So you take the mean of everything, subtract out that data point, and divide by the range or the standard deviation of those scores, and it answers the question of, is today's sentiment for this ticker relative to its recent history? That's what we're looking for there, okay? And then topic shift is the day-over-day change. This is calculated using Jensen, Shannon distance between yesterday's and today's topic distribution of headlines for that specific ticker. Okay, so we do have a couple metrics here. We're trying to quantify things and then again understand the impact on the stock price. That's what the point of this whole thing is, right? So the price impact is relative to the abnormal returns. Okay, so we can get that over here. So I'm looking for something that is basically normal. If my notes here, I have if one next we get a label of 1 if the next day's 3-day CAR is greater than 0. Otherwise, we get 0. Okay, so in most cases here, we don't have a whole lot of 1s, and that's just because the news tends to be kind of the same relative sort of thing over time. You do have extreme news stories, but you don't see too many of those, right? So a lot of times you'll get zero. There's really no significant label here. There's no meaning or importance between the news article that's published and the stock price that we're looking at relative to the news, right? But sometimes you do see an impact, right? But it's pretty low in most cases. So, so this thing is running. I think we're in good shape. I'm going to, I guess I'm going to pause the video. I thought this thing was a little bit faster, but that's fine. I don't want to subject you to having to wait for this thing to finish up. This could take a couple of minutes. I'll just hit the pause button and I'll be back when this thing is done, okay? All right, so the job is finished. And again, we're looking for either ones or zeros if the cumulative abnormal return for the stock price is, how do I explain this? We get a 1 if the cumulative return, abnormal return over the next 3 trading days is positive, right? Otherwise, we get a 0. So you'll see there's quite a few zeros in here. I don't even see any 1s, but that's fine. We just want to know what the pattern of the stock price has been and what the trend is. Okay, so that's why we're doing this step. And this is basically a supervised target for an event-driven alpha model, right? So the event is the news story, and we want to see if we can generate positive alpha. This is capital gains and profit in the stock market. That's what alpha measures using the features that I just showed you, using the BERT model, using the sentiment analysis, and so on and so forth. So now we have to align the news features and the stock returns. So that's what this step does over here. Okay, so I can see the ticker down here. This is article count. Usually it's 1. Every once in a while you get more than 1. The sentiment mean, so this is the average sentiment score. So close to 1.0 is going to be high. This is going to be positive. Negative 1.0 is going to be highly negative. So I see one that's pretty positive over here for Honeywell, and I see one that's fairly negative over here for Boeing. The sentiment z-score, again, the z-score measures the overall mean for all the scores minus the data point divided by the standard deviation. That's what that is, okay? The topic shift is over here, and label car is the last metric that I'm using over here. So you can see, I'm going back in time a little bit. We have like some sentiment over here, right? That's pretty positive. That's somewhat neutral, mostly neutral. This is highly negative, pretty much negative, positive, kind of neutral right here. It's not really strong. This is highly positive and somewhat strong negative, but I think this would actually register as neutral. I think that's how that would be interpreted. So, okay, so now we can move on to the next part here. The article count is simply the counts. The cent meaning is yesterday's average Finbert sentiment analysis. Remember, Finbert is doing all of the, as a pre-trained model, is doing all of the analysis of the body of text, right, and the language specifically relevant to finance topics, right? So the sentiment Z is yesterday's sentiment surprise. Again, I'm calculating the z-score the standard way, like I showed you. The topic shift is yesterday's average day-over-day topic change, and the label car 3 is your target, which is a 3-day cumulative abnormal return. This is the car starting on this date, right? Looking back over three time periods, basically 3 days, and with a daily top 20% selection and a tiny cross selection, you could be selecting one name or none per day. Okay, so sometimes there's just no news articles for whatever reason coming out about these tickers, and then sometimes you'll have one, sometimes there'll be more than one, but there's no guarantee there's even going to be news published about Microsoft and Honeywell and Boeing and Apple, right? So if there's no news, then there's nothing to do. There's no action, there's no event. So moving on, can we actually profit from this? That's what I want to know, right? So the model setup, it seems to be working. But how do we actually generate a profit? And can we generate a profit? And how do we do that? So that is what this cell is for right here. Control Enter to refresh the cell. I'm using a new model here. So I have the training and testing. TR is training and TE is testing. So I'm not going to get into all the machine learning. This video is not about that, but I have dozens of videos on my channel specifically about machine learning. You always have the training set and the testing set. Usually it's about 70-30 or 80-20. If I think by default it goes to a 70-30, but you can choose whatever testing threshold you want. You can make it 75%, 80%, right? So just basic model, running the model over there to see if there's any significance and what the outcome here is, right? So we went ahead and generated all the signals. We can see we started the portfolio at about, this is 100% of the money invested. We lost a little money over time. This is about down about 2%, kind of dips down here, down about almost 4% at this point. And then the portfolio comes back a little bit, and we end after, what is this? 6 months. I think it's 6 months. Today is October 3rd, 2025. So we go back about 6 months, and we end down at about 98.81%. So we lost some money on this trading strategy, right? If we bought these Dow 30 components and have equal weighting for each of those, I think it's about 12.5% of the total amount of money. So if you had 100,000, you'd put 12,500 into each of these stocks, and you would end up with a negative return of about just over 1%. All right. So really, we're not making any money on this trading strategy whatsoever. And you can drag that across and scroll that out if that's your pleasure. You can go ahead and do that. That's why I like these plotly charts. Charts are very interactive and dynamic. So really, 98 is about down 98. I ran this a couple times, and it's pretty dynamic, right? So it's going to change a little bit. So this is last day I ran this. Last time I ran this was a couple days ago. So walk forward, as configured with this, RSS news is not profitable. Certainly before costs, right? Because I haven't even taken into consideration any trading costs or any taxes. You wouldn't owe taxes on this because you actually lost money. But basically, the whole strategy is just not generating a profit. So we could say that the headlines are short. They're a little bit duplication. We saw a couple times when the news article was 2. We had 2 counts of those. That was a little bit weird. You would think they would just put out 1, but sometimes there's more than 1. And they're kind of laggy, right? So it's always backwards looking. So the news will come out, the stock price could be impacted, but really it's not going to have a very major impact. This is called de minimis. There's really no impact whatsoever on these stock prices. You lose a little bit of money, in this case about 1.5 to 2% negative return, right? This is called capital destruction. You want to create capital, you don't want to destroy capital. So this strategy simply doesn't work. But again, we looked at the entire portfolio, right? We invested in all of these stocks. So now we can take a slightly different perspective and say, well, okay, this is all well and good. So I can't put an equal amount of money in all 30 Dow stocks and expect to make money. It's just not going to happen. We did the walk forward. We did the lag back in time. I think that was like 3 days. I think that's why I said that too. So it's not going to work. But maybe we can pick specific stocks and generate positive returns on some of these Dow 30 components. Maybe we don't have to have a very diverse portfolio. Maybe we can look at just a handful of stocks. And if you have a certain affinity for Amazon, you can buy that. This is Amgen, McDonald's, Johnson & Johnson. Maybe you can just pick a few that you follow that are your favorites and use these news generation RSS articles, right? And say, maybe I can just pick a few stocks. I don't have to pick all 30. Maybe I can concentrate the portfolio on just a handful of these and see what the returns are. So these are the news correlations, right? That's what I'm looking at right here. And I'm going to go back to the same methodology I had before with counting the articles, sentiment mean, sentiment z-score, and then topic shift to see if this is moving over time. So this RSS window is recent. It goes back 180 days. There are a few Apple headlines, few McDonald's, few about Boeing, and so on and so forth. Some features for Apple are actually missing on some days, right? The news doesn't come out every single day about Apple, and that's totally fine. But we do want to capture these, right, whatever is available, and try to understand the potential direction or impact that's going to have on the stock price. Something is happening or something big is coming up, right? That's what we want to try to understand. So this FinBERT pre-trained model is helping us to understand that. What else do I have in my notes? Higher sentiment mean is more positive and lower is more negative. I think that's pretty straightforward. The sentiment Z, higher surprise versus baseline, right? So again, the Z-score is the average price minus the the actual data point divided by the standard deviation. That's how we're calculating that. And we're looking at shifts over time too. Is there some kind of regime change? Like, is the CEO of one of these top companies like a newly appointed CEO? That is going to probably drive stock prices, right? Is there something novel that the company's coming out with, something innovative, something that's really big news and it's really going to drive the stock price up? Or maybe there's a recall or some kind of investigation, or the CEO resigns unexpectedly. That would be bad news, and that is going to push down the stock price most likely. Okay, so let's look for some evidence of that. I'm going to hit Control Enter to run this thing. Okay, so I have the positive, negative, neutral sentiment over here, the average mean return for 1 day. This is the 3-day mean, and then the count of the news article, right? And then I want to try to understand the impact that this has on the stock price. So the average 1-day mean for negative news articles actually has a positive impact based both on the AR mean number and the CAR 3-day mean number, right? For neutral, there's not too much really going on here, right? So neutral news is basically just neutral. There's no impact. Negative news is actually positively impacting the stock. That's kind of surprising, but it's not unheard of. And if the news is flagged as positive, the AR mean is actually going to be negative, right? So here's a case in several cases where positive news has a negative impact on the stock price for the 1-day mean return, but for the 3-day, it is positive. That's what I would expect over here. This is a little bit counterintuitive, but apparently negative news drives up the stock price pretty significantly, actually, but not like super huge, not as much as you would really expect it to. And this is a heat map over here. So the red bar is going to be higher negative. You can see higher negative over here. So this for TRV is negative 0.08, but it's pretty small. It's pretty tiny. And here, this is almost incalculable. This is close to 0. This darker blue is 0.06. So negative news has a average 3-day abnormal return positive for triple M, positive for IBM, and positive for CVX. And these over here are I'm sorry, negative news, right? We're looking at negative. So this actually can have a positive impact on triple M. The others are tiny. I wouldn't even really register that. It barely moves the needle. Here, neutral news is associated with a negative stock price movement for TRV. These are slightly positive. And over here, you have some positive news specifically for CVX and a positive move of the stock price. And over here, you have slight negative move of the stock price with positive news, right? So you have to look at these 3 columns. You have negative news, neutral news, and positive news. And there is not a huge impact on the stock price. You have one that goes down 8%. So the stock tanked 8% for TRV, right? I only see one instance of that. And all these others are pretty much not even moving that much. I mean, just slightly. But I would say that the market is pretty random, and you cannot use like positive, neutral, or negative kind of news that comes out and expect that to have a real impact on the stock price. Maybe a small, tiny nudge, but nothing significant, nothing that you could use to actually trade on and to make or a capital creation or to create some kind of profit from. It just doesn't exist, guys. It just doesn't exist. Okay, but at least we answered that question. Can we look at news that's coming out from a reliable source, it's all from Google, and create a positive profit-driven alpha pipeline for the Dow 30 components? No, we can't do it. It's not possible. So that's it, guys. So we answered this question, and I think it was pretty interesting. I think it was a pretty interesting journey to get here. So I would like to see some positive impact over here between news and the stock price movement, but it just doesn't exist. So that's it, guys. I'm going to wrap it up here. Thanks for your time. Thanks for watching through to the end. I appreciate that. I am going to take this thing, put this to bed right now, and I will save a copy of the video and I'll post it later today for your amusement and enjoyment and all that fun stuff. Okay, so I'm going to wrap it up here and I'll see you guys in the next one. Take care for now. Goodbye.